is inching lower. Now the bank Nifty is down about 111 points, and Nifty is down 42 points, 11,640 is what we have, though there's some recovery happening in some names. Gen Irrigation, it looks like finally there's some bit of buying which has happened. It's been a one-way manic decline on that stock, but from the low point there's a bit of a recovery which is on. But we have Indiabulls Housing, which is now the top Nifty gainer. They have announced a move to sort of shore up the confidence within the investor community. We have Gagan Banga now joining us from the company. Gagan, hi. Good morning. Thanks a lot for joining us. Good
morning.
Of course, right now there's a bit of fear psychosis playing out. But what's the current situation? Obviously, you're saying that you're buying back the NCD, so this is a bit of a message that liquidity may not be as much of an issue with Indiabulls as it may be with some other companies. But still, if you could give us the current situation right now.
Yeah, just to put in context, the last, say, 8 to 9 months since September, the company the sector has been facing challenges around liquidity. But what has the company done? The company has raised close to about 58,000 crores since September 21st to date. These are fresh monies which have come in through bank term loans, through securitization, through bonds. In the current quarter, the company also achieved its first international rating, which is a BB+, which is just one notch below the sovereign, and launched its first international dollar bond and raised $350 million. As we speak, in the first quarter, we are the third or the fourth largest bond issuer in the country, both domestic and internationally. And as of 31st of May, we had sent out our filing, which we've been doing, and perhaps one of the few NBFCs which has been doing, to send out our cash statement, which read 28,150 crores of cash. When we started the crisis and over the last 10 years, we have been maintaining about 20 to 25% of our loan book as cash. So at that point in time, we had around 17,000 crores of cash. And through this liquidity crisis, when the sector is in pain, we've actually upped it by over 10,000 crores, and today we have a cash buffer of over 28,000 crores. Okay. So today the peculiar situation is that mutual funds, which are the other, so to say, sector which have suffered through the last 9 months, have invested in Indiabulls across both bonds and about 600-700 crores of CP which is left, all of about 10,000 crores, and I will, as on date, have about 11,000 crores of our money invested in mutual funds as part of our treasury operations.
Okay, sorry, Gagan, the question that I have on my mind is that what's the worst case scenario from some of the stressed accounts, like Radius, for example? What's the worst case scenario? And in FY19, you did 3,500 crores of PAT. So FY20, how much do you think you will be impacted?
FY19, our PAT was around 4,091 crores, Anuj. And we have been proactively taking a lot of provisions. We've also been making sure, and we've been talking about it for the last 2 quarters, that our portfolio is relatively unique, that it has heart of town assets, where to liquidate some of these assets and to raise equity is quite possible. And the one BKC transaction which got done with Blackstone last week is a testimony of the kind of assets that we have. And most of the assets, and we had even gone to the extent of listing them down in our Q3 earnings, are all heart of town assets, buildings, malls, residential projects, which you and I would also be familiar with. These are not back and beyond kind of assets or anything which does not get recognized. Typically, there is an equity value. And what has happened with, let's say, a one BKC transaction is that we have received all of our debt. There was some rumor going around in the market as if we've taken a haircut. We've received all of our debt. Over and above our debt, the developer has been able to clear all regulatory dues, without which the transaction could not have happened with the likes of MMRDA. And besides us, I am aware of the fact that at least 3 banks have additionally received about 150 crores just out of the transaction sale of one BKC.
So Gagan,
and over the last 6 months.
Sure. Can you just give us the exact numbers? How much was the outstanding loan amount to the Radius Group, and how much of it has been settled now?
So on around this asset, we had to receive 1,650 crores, ballpark of 1,650 crores. We've received all the amounts which were due against this asset.
So
Okay,
Gagan,
so there's
a
been
related
no,
question.
Sure.
Up to the last principal and interest.
So Gagan, my related question is going to be on this. I think with the rest of the NBFC universe, the concern is on the liability side. I think for Indiabulls, because of what is happening, there are certain concerns on the asset side. And I'm not talking about your housing finance portfolio. I'm talking about your exposure to developers. Now, Radius is one example. It'll really help if you give us a handle of the total developer exposure that you have. And within that, I mean, some estimation, if you think there's stress building up, then, you know, in 20%, 30% of that, how is the developer portfolio looking?
So, you know, the best way to crystallize this is as to what is management's guidance in terms of what would credit costs look like this year. We've done a pretty deep scrub over the last 3 quarters as to what the credit costs would look like. They would be in the similar handle of 70 to 100 basis points, which is something that we've been running around for, I think, now 4 years. There is enough profitability in the company to be able to carry those kind of provisions. And I would like to reiterate that I don't see any major loss in profitability or any of any sort. The first quarter earnings are around the corner, and we will notice that the credit provisioning line is actually pretty controlled. So I am not expecting any sort of a profitability loss on account of provisions which are required.
Okay.
What is additionally to be appreciated is that, you know, of the 9-10%, if you will just give me 1 minute, what has to be additionally appreciated is that of the 9 or 10,000 crores in that handle, the construction finance portfolio that we have, we also have close to about 3,000 crores plus of profits sitting in our Oak North investment. And those profits are for real. You know, SoftBank just invested in that transaction, and I know for a fact that they are keen to invest a lot more. Now that 3,000 crores has not yet even flown through the P&L. So that's the kind of support that we have sitting outside of the profitability. The third point, which is little technical but worth mentioning, that amongst all of our peers, larger and smaller, our pre-provisioning operating profits are about 3 times those of our peers to cover our construction finance book. 3 times that. So that's the earning strength to be able to take care of whatever happens in the construction finance book. We've been doing this business for the last 15 years.
Sure.
The quality of the assets are what they are. We are not exposed to super premium assets. I don't see why, you know, when home loan books of most banks are expanding between 20 and 25%, obviously homes are being sold. So why should these projects come under any
Gagan,
stress?
Sure. Can you give us the exact numbers? What is the total exposure that you have to the Radius Group? I mean, you told us about the one BKC project. What's the total exposure to the Supertech Group, and how much of this is under construction projects? If you can give us the exact numbers.
So to the Supertech Group, you know, without giving any numbers, it would not be fair and to the best of my understanding, against regulations. Most of the exposure to the Radius Group has already been dealt with the one BKC transaction. And on the Supertech Group, if you read through our Q3 and Q4 earnings, those accounts have been classified as NPA and have been fully provided for, 100% provided for. So whatever happens out of the Supertech Group, and these are live assets and projects which are running, it is only going to be accretive to the P&L and not going to be any additional cost which is going to be coming in. So as we speak, Supertech is 100% provided.
Okay. Gagan, you know, if you could tell us, and this is basically, I'm asking you because there's a market perception, what has been Indiabulls Group's, you know, dealings with the Yes Bank, DHFL, or their promoters? If you could give us some information, because that's a bit of a perception issue that because DHFL and Yes Bank are going through so much stress, Indiabulls Housing is also going through that much stress.
Yeah. So what happens in times of stress is that, or in times of uncertainty, or when a new event happens, for an entrepreneurial group to build a doomsday theory is very relevant. I'll answer your question in 10 seconds, but I would like to go back to 2016 when we had made an investment in Oak North Bank, $100 million at an enterprise value of $250 million. The stock had collapsed that day by over 20%, and all kinds of theories had happened. Now, 2.5 years later, we have already received back our $100 million. We still own around 16% of the bank. The bank has investors such as GIC of Singapore. SoftBank is the fastest growing bank in Europe and has still got 3,000 crores worth more. That is the value of my 16%, which is all profit, right? So there would be these naysayers and critics who would always be out there. And as an entrepreneurial organization, our only defense is that to thwart the efforts of such naysayers, we will make sure that we are extremely liquid. Today, as we speak, we have between 25 and 30% of our loan book as cash, and we will continue to maintain it, and we will continue to develop. As far as Yes Bank and the other names that you spoke about, the Yes Bank CEO also in recent media interactions has said that they've also faced these questions. All kinds of scrutiny has happened, and there is no merit in these arguments. Indiabulls Housing Finance has a term loan borrowing program of close to about 50,000 crores. Yes Bank's total contribution in that program is 350 crores. Right? So that's the kind of interaction that we are talking about. We have never ever done business with Dewan Housing Finance Limited. Right? We have, as we speak, zero exposure to the ADAG group. Right? Zero. Whatever loans they had taken in the past, they have repaid all of those loans with full interest and principal. So I hope this matter is now buried and put to rest. That's the level of interaction that we have. Yes Bank is a great bank, has been doing extremely well till its recent issues. Whatever business will happen normal course of business. Today, I would be holding certificates of deposits of a variety of banks of close to about 9,209 crores. That's the interconnectedness of the system. Now, I hold CDs of Axis Bank, Bank of Baroda, ICICI Bank. What does that mean? Nothing.
Okay. I think it's really important that you've placed some of these things on record, and we take that, Gagan. No exposure to the ADAG group, no exposure to DHFL. I think these are important clarifications. That brings me to the next question. What is happening with respect to the LVB merger and the eventual sort of move towards banking? What are the discussions with the Reserve Bank of India? We've seen that deal with the Embassy Group on the real estate business. How much more is going to be sold by promoters, and what happens on the LVB merger?
So, again, on the LVB merger, when we announced that merger, we sort of internally knew that all kinds of naysayers would step in, all kinds of efforts to thwart this initiative would be taken. But what should perhaps get appreciated by the media and the market is that irrespective of the outcome, and I continue to remain extremely confident and optimistic about the outcome, but irrespective of the outcome, what Indiabulls is essentially saying is that we are voluntarily submitting ourselves to an ongoing due diligence process, which is perhaps in our country the tightest, that of being a bank. So we are actually welcoming and embracing the tightest possible regulatory regime that exists in the country. Now, on the specific point of where we are, we formally submitted our applications around the 6th, 7th of May to the Reserve Bank of India. It's a sensitive regulatory process. It is also a time-consuming process. At the time of making the announcement, when the two boards had approved the transaction, we had indicated that towards Q2 of the current fiscal is when we hope to get more clarity, and those timelines remain unchanged. I am hopeful that Q2 of the current fiscal, which is next quarter, we should be getting more clarity. Okay. Now, it is our endeavor to make sure that whatever are the possible hindrances as far as the bank merger process is concerned, we make sure that those hindrances are removed. We do appreciate that for a large financial services business, and more so for a bank, to be sitting with a real estate company, there comes a size where you can't do that. And the promoter has very gracefully decided to exit the real estate business. We have had a strong partner as Blackstone. We've now found a strong partner in Embassy. Embassy has acquired already close to about 14-15% of the stake, subject to various regulatory approvals which are relevant, because this is a listed company, and other related regulatory approvals such as Competition Commission, etc. We hope to conclude this transaction again in the first half of the next quarter. So sometime around end of July is when the rest of the transaction will be concluded. Indiabulls Real Estate's promoter Samir would get depromoterized, and Embassy would step in as the promoter, subject to regulatory approvals sometime towards end of July, early August. So that's the timeline. Samir, as a virtue of this, and as a virtue of all the investments that he has made, and the dividends that he has received, has earned close to about 3,700 crores just by the first leg of this transaction and the dividends. As a consequence, he has removed all the debt that he has. So as we speak, the promoter has no debt whatsoever in his personal capacity. And as a result, over the last 4-5 days, you would have read that all pledges which were there of various group companies, all those shares have also been depledged. He further has close to about 2,000 crores of cash, which will get invested and has been invested in various Indiabulls companies.
Okay. Well, I need to keep coming back to this builder book stress, Gagan, because the situation is pretty dire there. I mean, you're refusing to tell us what the exposure to Supertech is, but Supertech has been, its credit rating has been downgraded to default, so you will understand where investor concern comes from. Can you at least tell us whether it's true that you have about 500 crores of exposure to Supertech A? And do you have any exposure to names like Lodha? I mean, the Lodha group itself has about 18,000 crores of outstanding loans. Is any of that with Indiabulls? What about the Omkar group? What kind of an exposure do you have there?
Okay, so, I did not say that I will not divulge details. I said that as far as standard assets are concerned, it's best not to go there. Supertech is a non-performing asset. The non-performing asset is close to about, I think, from memory, if memory serves me right, it is in the handle of between 650 and 700 crores. All of that 650 to 700 crores stands fully provided for. There is not 1 rupee of loan to the Supertech group from Indiabulls, which is not provided for. From what I understand, in this particular quarter, we would have actually, because sales of various units continue to happen, we would have actually received 15 to 20 crores through those sales. So those 15 to 20 crores would go back and actually be profit accretive. And so there is no further drain which is required as far as Supertech group is concerned. We have zero exposure to Lodha group. The quality of assets, the kind of prudence that we have demonstrated as far as the real estate book is concerned, we provided well ahead of time. I do know of a lot of my peers who actually had to forcibly classify Supertech as a non-performing, because we categorize that as a non-performing loan in December, back in December itself. And if you read through our December quarterly earnings, It is very well documented as to how we have dealt with. In December, we had created provisions of 330 crores, and in the March quarter, we had completely provided for Supertech.
Okay. Gagan, we recently had this deal from Piramal.
Similarly, you know, we had well ahead of time. Yes.
Sure, please complete the point, then I'll ask my question.
I said we had also well ahead of time provided for Palais Royal, for example, and today we are at that stage where we made several efforts. You know, some of those efforts have been successful. At least legally, we've been able to get it to a point where the asset can get auctioned, and I'm pretty optimistic that over the next month or so, the 700 odd crores there would also be received back by the company through the auction process.
Fair enough.
So that's another buffer that we have created. So 3,000 crores of Oak North, 700 crores of Palais Royal, 100% provisions on Supertech. We have like 4,000-5,000 crores lying there to come in to cover up, God forbid, if there is any additional provisions required, which at this point in time, I'm pretty sure that our regular P&L can comfortably provide for whatever is required this year.
Fair enough. Which was actually my next question. Since we had this deal from Piramal where they sold stake in Shriram Transport, of course, you know, the market believes that was a bit of a distressed sale. But this Oak North stake, any plan to monetize it to, you know, you're talking about the buffer, but just to keep it handy, is there likely to be any deal on that?
So we have been engaged with these new large investors which have come in. Both GIC and SoftBank are extremely large investors, and there are a couple of other investors sitting out there. We will keep our options open. We have already received our initial investment back and more, 60 crores more, and so all of this is a profit. So it's like the profit percentage is you know, abnormally high. And
is this on the table to get that money now?
It is an option that we will continue to explore.
Okay, are you exploring that right now actively?
In some form, we are not actively exploring it, but we are definitely keeping our options open.
Okay, Gagan, so I'm going to go back to a question I asked you a couple of minutes back, just to try and get the numbers. You've already given us certain individual details. Can you give us the size of the total construction finance book right now? And from what you said, I believe that whatever has gone bad has been adequately provided for, and you have enough buffers there. But from the total construction finance book, some guidance, what percentage of that perhaps could slip into stress? That kind of clarity, I think, would really go a long way in helping.
So from the construction finance book, you know, as I said, we would be running with credit costs of approximately 1%. A large part of those credit costs come in the form of provisions that we have to do because some of these projects, for one reason or the other, get stuck. So for the current year, a large part of the 1% credit costs that I'm talking about would continue to go towards the construction finance book itself. The 1% credit costs ranging between 70 bips and 100 bips has been something which we have been also creating in the past. We were creating additional buffers in the past. So this 1% provision is something that the P&L can easily absorb. So I do not see any volatility coming in our profit after tax reported number because of any stress in any part of the book, be it construction finance or any other part of the book. That book is extremely well collateralized. Over 70% of our construction finance loans would have another building to it, which would be a lease rent discounting building. The equity that would be required to support the construction finance book can easily get released by liquidation, either partially or fully, of the LRD building. So structurally speaking, this book is extremely superior. What we have done as a disclosure in Q3 is that we've listed down all of the LRD assets, and on these LRD assets, you would appreciate that there is a lot of equity which is out there to support anything that can potentially go wrong. So between, and I shall list, between our regular earnings, the collateral support and the equity support that we get through LRDs, and all the other buffers that we have built over the years, such as Oak North and the extra provisions that we are carrying on these assets, we believe strongly that as far as fiscal 20 is concerned or 21 is concerned, there is no volatility in earnings which is going to come, or any pressure which is going to come on account of credit costs.
Okay, so do you want to give us any kind of guidance on what the, I mean, even on the gross NPA front, if you look at what you've done recently, you're still sitting at sub 1%. But with the way things are going, there is quite a bit of builder stress, as we all know. Do you get a sense that at least in FY20, there could be some worsening of asset quality? And if yes, to what extent?
Yeah, so I would imagine that our gross NPLs will be in the range of 0.88 to 1.2%. That's the kind of a range that we expect through the course of the current fiscal.
And on growth in the cost of money itself, now that we've discussed asset quality and the liability profile in detail, Q4 was a go-slow quarter, perhaps because you were looking at a lot of these liquidity issues. This year, in terms of growing the book itself, is that something that's going to come back on track? And you manage spreads very well, even in the fourth quarter. Now with interest rates coming down from the Reserve Bank of India, generally, how is cost of money looking like for Indiabulls Housing Finance?
So cost of money has started declining, and banks themselves have marginally started reducing MCLR. So generally speaking, cost of money is going to be coming down. Margins continue to remain pretty healthy. They remain actually higher than our guided range of 3 to 325 basis points. We do continue in preparation of or in anticipation that in due course of time there would be a merger with a bank. We continue to run down our CRE exposure, so that's the other big theme that we are following. And within that, these are relatively chunkier loans. So my sense is that as far as the first half of the year is concerned, we would not see appreciable balance sheet growth or loan AUM growth, because we are continuing to get a fairly healthy amount of prepayments from some of our CRE exposures. This quarter itself, we would have received prepayments from CRE already as we speak to the tune of about 3,500-4,000 crores, and that is only going to go up. For the full year, we had guided that we should be looking at mid to high teen kind of a growth, and we are quite confident that for the full year, we would get to a mid to high teen kind of a growth.
Okay, Gagan, final question then. While the PIL has been withdrawn and the intentions was clearly malified behind that, but aside of that, some of the concerns perhaps in those PIL are still, bothering investors. And also, has there been any kind of any government agency which has asked any questions of you?
So as far as the PIL and all of this nonsense that we've been going through, as perhaps a consequence of the fact that we are doing all of this effort around a bank, and I continue to believe that it is an outcome of that. The PIL, the man keeps writing and through fronts and keeps withdrawing. So all of this has gone on, can perhaps continue to go on to come to. And we have, as the suffering party, all we could do was contact the law enforcement agencies and be transparent about whatever was going on. We have gone ahead, contacted the law enforcement agencies. They've already arrested one person, and I'm aware that there are quite a few hectic developments, the results of which you will see over the course of the next few days. Now, coming to the actual moot point as to whatever has been so to say alleged, right? There are what is perhaps not appreciated in the report is that Indiabulls Group is not just a standalone financial services company. It is a conglomerate. It has a large real estate development company, which we are getting out of. But over the course of the years, over the last 12 years, we've had large real estate development business also. DLF, for example, as a partner, which is also one of the largest and perhaps the number one real estate development company in the country, has been a partner of Indiabulls Real Estate since 2006, and has also been a borrower of Indiabulls Housing for the last 9 years. Now, that does not mean that there is any quid pro quo. So as we speak, I would like to put on record the following. One, that our promoter today has no borrowings from any bank or any company whatsoever in India. So the total borrowings of our promoter today, as we speak, is zero. I've already made the point that our exposure to ADAG Group, which has been referred to in that report, our exposure to ADAG Group as we speak is zero. DLF continues to be a great credit for us, but DLF has no loans or any investments to any promoter companies as we speak. And whatever is being said, whatever loans are being spoken about from Indiabulls Housing to these real estate companies, etc., all of those loans are current, paid to the last due, be it of principal and interest. And our promoter, as I said, has no borrowings whatsoever. Now we can, somebody can continue to sensationalize stuff. Whenever the organization is trying to make a progressive step, I was mentioning, at the time of Oak North, also similar allegations came that the founder is trying to take out money, and so on through this route by making an investment in a bank. Now, bank is the most regulated business. Bank of England, after 150 years, had given 5 licenses. If that is a route to take money for a person who, in the last few years, has earned from stake sale and dividends as much as 3,700 crores, sure, it is quite an outrageous thing to be taken. The company will continue to engage with. So as far as right now is concerned, there is no regulatory agency which has yet gotten in touch with me. We welcome anybody to come and ask us any question on this report. We have our answers ready, and we shall be more than happy to share all the facts. The facts can be compiled and understood in less than 5 minutes.
Okay, well, Gagan, we will leave it at that. Thank you for taking all our questions. But I must tell you that you talked about us sensationalizing things. You know better than any of us that the situation at the moment is not good by a far stretch. I mean, things are definitely in a very stressful situation, especially with respect to the companies that you have an exposure to. And that's the reason we've been talking about this in great detail. But in any case, thanks so much for... Go ahead.
I'm sorry, I did not mean that... No, 1 second, if you can just bear with me. I did not mean that CNBC has sensationalized it. Sure. I'm saying that there are several naysayers who try and sensationalize it. Today, social media is a pretty powerful platform, and the kind of junk that you read on that is pretty... I'm actually very grateful to how CNBC has been extremely mature in the interactions over the last 2 weeks.
Okay, and that's what we aim to, do. Gagan will always ask tough questions, but we'll always report what's true. Thanks a lot for taking time and talking to us. We could have asked more questions, but we have positive time. We'll take a break.